I'm John Kaiser at the Metals Investor Forum in Vancouver, September 21st, 2024. I am here with Marc Blythe, Independent Director of Silver North Resources. In March in Toronto at the Metals Investor Forum, I talked to the CEO, Jason Weber. Today we're going to get the perspective from an independent director along with a similar range of questions. Marc, welcome to Vancouver.
Thank you very much, John. Pleasure to be here.
Marc, I followed Silver North back from its Alianza days, and that's when the company was billed itself as a prospect generator farm-out company. It was successful. It had a fair number of farm-outs. None of them led to a world-class discovery and a buyout. But a year ago, the company decided that it would give up on the prospect generator farm-out model and focus on delivering a discovery with 100% owned projects. You've been around this sector for a while. What has changed to the landscape that makes the prospect or farm-out model so much more difficult today than it used to be when Rick Rule would say the best way to play the juniors is to bet on a prospect generator farm-out junior?
Well, I think a lot of things, John. It's a great question. I think access to capital is one thing. So a lot of deals are done with smaller companies, juniors who raise a bit of money in the market to go and work on a project, and they're struggling to raise that money right now. And then how that plays out for a prospect generator is that your project doesn't advance as quickly as you'd like for the shareholders. So then the news flow is delayed, and the company doesn't necessarily have the resources to do a good job. So you can lose some of the quality exploration that you put into the early stage work to prepare the property for option. Kind of gets lost if you option to a smaller company that doesn't have the resources to have a good team to continue that work. And I guess with the majors, sometimes you get a bit caught up in bureaucracy as well, where the geologists on the project might really like the project, but then the bean counters at the head office aren't necessarily as engaged and doesn't necessarily fit their strategy to advance the project. So you the upshot is you have these projects that you really like, good projects, but you can't advance them at the rate that you want to advance them at. And that's frustrating for the company and frustrating for the shareholders as well.
Now, one of the things that struck me was, we're in an age of the outcrops sticking out of the ground. The prospector can stumble across and say, Eureka, I found a major system. You do surface development, geochem sampling, soil sampling, geophysical surveys, build up a target, and then you farm it out to either a junior or a major. But it seems to me that those types of easy targets don't exist anymore, and that one needs to drill into the third dimension even before you can farm it out. So this idea that let the junior or another junior or major do the drilling, expensive drilling, that doesn't apply anymore. What are your thoughts about the need to go deeper underground with chasing targets that are either blind because there's barren cover, post-mineral cover on top, or you're just seeing peripheral evidence that something might be going on? Is this the wave of the future for junior exploration?
I think that's what it looks like in the here and now, but I think it's actually cyclical. And I think we're going to enter a phase where earlier stage projects will be desirable to those bigger companies again, because metal prices have gone up so far, and those bigger companies are doing really well because of those metal prices, and they need to replenish their resources and reserves. And they're going to work their way down the food chain fairly rapidly through the discoveries, and there's quite a lot of M&A going on in our sector right now. And I think as those bigger projects kind of get absorbed into those mid-tier and larger companies for resource and reserve development and pipeline, people will come back down the food chain. So I think it's a temporary phenomenon where you really need to have a project that's a little bit more advanced to attract the attention of a major player.
So in a sense, even though you're no longer a prospect generator farm-out company, what that really means is that you're now taking that extra step of raising the money to do the drilling, to scope out better what's going on, so you can bring it to a point where either you attract an awful lot of funding or you attract somebody with deep pockets to farm into it. Now, let's go to Haldane, the mountain that's to the west of the Keno Hill area. Hecla recently bought out Alexco and the Silver Wheaton royalty on silver, and is undertaking a rethink of that project. Now, before we get to Haldane, what is Hecla trying to do to turn around what turned out to be a failing operation for Alexco?
I think Alexco really struggled with, getting that into production story. They did a lot of things right. They had great geology, but they got into obviously quite a tough deal with Wheaton. And then they struggled a bit with some of the permitting challenges and whatnot. And I don't want to dwell on the problems that they had, but, Hecla obviously saw the grades, their resource grades are 26 ounces per ton, or about 900 grams a ton if you're metric. And those are fantastic grades. When you look at a lot of the underground silver mines in Mexico, 200 and 300 grams per ton seems to be a relatively common figure that you'll see. But to be up at 900 grams a ton, these are really fabulous high-grade deposits. I think there's been something like 220 million ounces of silver mined from the Keno Hill silver mine in its history. It's got like a 100-year history. It's an amazing project, and certainly just needs somebody with deeper pockets to really push that forward. And I think they're making good progress from what I've heard.
Now, when I talked to Jason back in March, he suggested that the error Alexco had made is that they expected, based on the geological model, that the silver grade would diminish at depth, and this would be more a zinc lead with the silver byproduct story, which is why they sold the silver streaming credit. Mm-hmm. And then lo and behold, as they go deeper, this is not happening. Mm. And Hecla is obviously now thinking in terms of this model that the silver persists at a high grade to quite an extent vertically. Now let's hop over to Haldane. Jason told me that this project is higher up in the system, which is a reason it has not been hit as hard as Keno Hill, and it's more oxidized at surface. So what was available for prospectors to find is just wasn't there. So it's had maybe 28 holes drilled in it in its entire history, and half of those were drilled by Silver North. Do you have sort of a rough idea of the west and the main fault, which are the key controlling structures going through there? As Jason said, he said there's these jogs within it where these big lenses of very rich zinc, silver, lead mineralization occur. Because of the funding difficulties this year, you were not able to raise the $2 million that you wanted to hit this hard systematically. This market is in a very nasty, sniper kill shot mode. You don't deliver me the barn burner result and we tank you.
That's right.
Now, obviously, you've done your work to figure out where should we position these 2 or 3 holes in these fault structures to see where these jogs are. Yeah. If you do not hit that, is the targeting such that you can learn, like actually advance your knowledge about where, if you actually had a proper budget, which I think you will next year when we get back into a bull market, what can you learn that will allow you to vector in and nail it next year if you don't manage to kill it this year?
It's a really good question, and you look at a small drill program and you say, well, is it worth doing, and so on. And I think, we've sized the program to suit where the market is at and the budget that we had available. But we're obviously trying to add value to this project. But you can also do damage with the drill program too. You can kill a story if you have a bad hole. So, I think we've done all the work to qualify these targets in terms of surface geochemistry, and we have some mapping of these structures and the previous drilling. So we've got previous drilling is try and understand which structure is actually the feeder for that mineralization. The big picture story here is that we're in the Keno Hill quartzite, which is exactly where you want to be, and it's exposed at surface. The mineralization that we see at surface is quite oxidized, as you mentioned, and a little different to gold deposits where the oxide is desirable. It's actually with silver deposits and base metal deposits, it's actually the sulfide that's desirable from a processing standpoint. So we're looking at trying to intersect those structures to look for that mineralization at depth. And obviously we're ranking these projects based on prior drilling, the surface geochemistry, the mapping, and a range of other factors like that. But yeah, you can look at trace element geochemistry and metal ratios to try and figure out where you are on these systems. But I think we've certainly done our best to pre-qualify the 4 holes that we're planning to drill. I think the first hole's complete up there, so it's pretty exciting timing. But the drill is the ultimate truth machine.
Yeah.
We're going to find out.
Now, if I understand the Keno Hill model correctly, if you can nail one of these near vertical lenses, all you need is 1 hole in it. Then the rest is to just chase it at depth. And obviously, we now know that this stuff persists to quite an extent.
That's right.
At depth.
Yeah.
So hopefully you get lucky, and
Hopefully.
then next year you already know exactly what you're going to do.
Yeah,
You're going to be able
yeah.
to raise money at a premium.
For sure.
Now the other target, which you're going to drill at least 1 hole into at Haldane, is Bighorn, which was first intersect drilled in 2019 only.
Mm-hmm.
I think it was only 1 hole.
There's 1 hole. That's correct.
Hole.
Yeah.
And it had interesting but not off the scale results.
Yeah.
And the company has been consulting with various groups about what to do there, and you are going to drill at least 1 hole there. What do you hope that this hole will deliver that elevates the Bighorn area into a brand new target that deserves a lot more holes?
That's a great question. When you've got a limited drill program, why are you putting holes in different locations? But for the Bighorn target, we have a great geochem anomaly there. And one of the things that we, as you mentioned, we talk with a range of people. One of the people that we talk to is one of the geologists responsible for some of the discoveries at Hecla's Keno Hill operations, and he emphasised to us the importance of width, and we have over a 2-metre intercept on that Bighorn target from 1 drill hole. He said that's really important. The tenor of the silver mineralization can change fairly rapidly if you're in the right spot. But the most important thing is that you've got enough structural width to accommodate enough ore to be interesting. So that's kind of why we're following up that target.
Mm-hmm.
Yeah.
Now, while you were still a prospect generator farm-out junior, you optioned the Tim property, which is at the southern part of Yukon, close to the border, not that far from Coeur's Silver Tip mining operation. And this was a deal which allows Coeur to go up to 80%, but it first needs to spend a specific amount of money to get to 51%. And because of permitting delays, they weren't going to meet that deadline. So you extended the deadline. But I'm looking at the terms, and it says to go to 80% after they vested for 51%, they need to deliver a feasibility study. And I'm looking at how horrific the permitting cycles have become in Canada now that thanks to UNDRIP and that the whole First Nations consultation process has really become an important part, and it's an obligation on the juniors side to do these consultations, but not on the First Nations side. So you end up having these permitting cycles stretched out forever. So in my view, there is zero chance that Coeur can deliver a feasibility study by 2028. So in the next few years, or a couple of years, maybe even next year, they'll vest for 51%, and you may end up with 51 to 49. Now, you've completed, or Coeur has completed 6 holes to test a 2-kilometer segment of this Tim structure, and there was talk about barbecue rock being intersected, and the visual press release didn't promise off the scale assays. But the message was that there was geological context that was encountered that has really upped the prospectivity of this target. Can you explain this barbecue rock and why, even though we may not get fantastic results, there's a good chance that Coeur will get very serious next year in next year's season?
We covered a lot of ground there, John. Barbecue rock is just one indication of a carbonate replacement type system. And a carbonate replacement system is where you have these hydrothermal fluids and you have metasomatism, which is one mineral being replaced by another mineral of a greater tenor. And there can be pressure and temperature involved as well. And as part of that process, some of the calcite can be driven off from the host rocks, from the carbonate host rocks. And when you see that, you know that mechanism is in place. But I think it's if people are really interested in these technical aspects, Dr. Peter McGaw is a really great resource, and he's got some presentations out there. He kind of has a checklist of all these things for these carbonate replacement deposits, and this district and our project ticks quite a lot of those check boxes. And when you are looking at these systems, you need a source of heat. which is an intrusion like a granitoid or a granite or a porphyry type intrusion, which provides heat, which mobilizes the fluids, the hydrothermal fluids in the system. And then you need obviously the right kind of host rocks, and you need some kind of structure. And if you have a look at our press releases, we're talking about the Wolf structure, which has more than 2 kilometers of continuity and mineralized showings at a couple of locations on that from historic trenching, and hopefully we'll get some sniffs from the drilling as well. But we're starting to see some of the pieces falling into place with the bigger kind of picture. And yeah, I really think that Coeur, they drilled a little bit more than expected, which is always a good thing. I think their field geologists are certainly excited about the project, and we hope we'll continue to work with them next year. It makes a lot of sense. They have a mill. We potentially have something in our property which would be of interest to their mill. It's close enough that you could transport it. Obviously, there's a lot of steps between here and a feasibility study. But we'll work with them. They've been a good partner. They've obviously had some changes in their strategies and First Nations. It's something that all companies have to treat seriously and deal with. And there's a range of issues. The First Nations, they were here first. They often don't have a lot of capacity to deal with people on a business-like kind of manner. So time constraints that companies face are probably of less importance to the First Nations, and they need to be involved in the process all the way along. They need to be respected and involved where you can involve them, and you need to think about the things that are important to them, which is the land and the environmental performance of your project, that you're not making a mess, and obviously the animals. Mines are temporary activities. A mine might run for 50 or 100 years, but these First Nations have been on the lands for thousands of years. So they're obviously thinking very long term, and you have to kind of fit in with the people who are in any community where you go and work these days as a mining company.
Now, back in March, I asked Jason, what is the size of the prize you're chasing at Haldane? He said, we're looking for a high-grade 30 million ounce silver resource. And I said, well, that's like a billion worth only, and it's going to be mined over a long period, and that's not a very, very big prize. But then he pointed out, we don't really want to develop this as a standalone. We don't need a standalone prize. Hecla would love to take this over and just truck the ore to get its mill up to capacity, because they're chasing ore much deeper down, and we'll have mine engineering issues with that. And then it sort of occurred to me, if Coeur, which is Hecla's silver rival, actually has success, and you end up with a 51 to 49% relationship, you have this interesting dynamic, which is the reason I've got you as one of my bottom fish rated companies, so that when you start having success at either of these ends, these two big producers or intermediate producers are going to be looking at, is that other one going to snatch this company away from the other? So most juniors, they have their project and they're at the mercy of the results there. But and any sort of thoughts on this dynamic and the rivalry between Coeur and Hecla, and how you guys sort of fit?
Just thinking about how we got here as a prospect generator, one of the things that you do actually manage to see is a lot of projects. You're working through projects. Some of them don't make it, so you jettison them and you're optioning things off, and other people spending money on them. And we've ended up over a long period of time having Haldane and Tim as projects that we think very highly of. And they're both interesting, for their own reasons. I mean, if we look at Mount Haldane, obviously Jason's got quite a modest exploration kind of target. It's not a resource, it's a target that we're working towards. But if you're close to an existing mine, then the barriers are probably quite a lot lower than if you're in a greenfields type situation. If you can mine something and truck it 20 or 30 kilometers to Alexco's or to Hecla's mill at Keno Hill, you don't have to buy a mill, right? And there's a big saving if you look at a feasibility study. The process plant and all that stuff is a lot of money, and similarly for Coeur, and with Coeur, that requirement to get to a feasibility study, Coeur are not going to do a feasibility study on a small mine. This is going to be tens and hundreds of millions of dollars if we get there, and for a little junior with a $5 million market cap to potentially have somebody funding you to feasibility on a project that's probably, to be of interest to them, going to have to be in the hundreds of millions of dollars. That's pretty exciting.
Yeah, so you would probably do a deal to amend those terms so that you're not caught by permitting delays that wouldn't be Coeur's fault?
I think, when you look at successful deals where projects are optioned out, quite often the terms are amended. And I think, if people behave in a business like manner, you're obviously getting together regularly, and we have a really good relationship with the folks at Coeur, and I'm not involved with it day to day.
Yeah, you're the independent director.
Jason is, they talk regularly, and they're on board with the plans, and they seek our thoughts, and we obviously get briefings from them, which we really appreciate. And I think if you work together in a business-like way, maybe you do have to amend a deal or make a subsequent deal, or if you can't make a deal, then you get diluted down as they spend the money. But when you start looking at the dilution formula on a project that's had a significant amount of money spent on it, it actually takes quite a while to get diluted out of it anyway.
Oh, okay.
So that's the worst-case scenario,
Excellent. Well, I do hope you get lucky on some of those Haldane holes that are being drilled right now. I've been speaking with Marc Blythe, Independent Director of Silver North Resources. Thank you, Marc.
Thank you very much, John.